In what just might be the most significant overhaul in the company's history, Chinese e-commerce giant Alibaba announcing today that it will reorganize its business into 6 different companies, from 1 to 6, marking a massive overhaul as Beijing shows signs of easing their own regulatory crackdown on the company and the country's overall tech sector. In an email to employees, Alibaba Group Chairman Daniel Zhang said each of the 6 entities will be managed by its own CEO and its own board of directors, and that the market is the best litmus test, and each business group and company can pursue independent fundraising and IPOs when they are ready. And as expected, U.S.-listed shares of Alibaba rising on the announcement, but the stock is also down about 70% from its peak back in late 2020 as China's tech crackdown progressed. China's economy has suffered in the wake of a significant regulatory crackdown and COVID-0 lockdowns that killed productivity for many domestic companies. And this move to split Alibaba's operations addressed the key concern of officials from the Chinese Communist Party, who had raised concerns about the rising power and the influence of the e-commerce firm Alibaba. And Alibaba's action, announced just one day after the company's high-profile founder, billionaire Jack Ma, returned to mainland China after spending nearly 1 year abroad, though people inside the company telling the Wall Street Journal this morning that the move was unrelated. Ma had notably kept a low profile during the regulatory clampdown, spending time in Japan and other countries while reportedly ceding control of his companies to younger executives. Back in 2020, China ending a planned $37 billion initial public offering of Ma's Ant Group, an affiliate of Alibaba Group, after the billionaire was publicly critical of Chinese regulators. And in case you were wondering, Ma has a personal net worth of $32.5 billion, according to the latest Bloomberg Billionaires Index. The guy has a lot of money. And the 6 business units set to be spun off were identified already as Cloud Intelligence Group, Taobao Tmall Commerce Group, Local Services Group, Qianao Smart Logistics, Global Digital Commerce Group, and Digital Media and Entertainment Group. The Taobao T-Mobile Commerce Group, that's the unit responsible for China-based e-commerce operations, which will remain a wholly owned subsidiary of Alibaba. So there you have it, Alibaba splitting into 6 different companies. Jack Ma is back in mainland China, and now it's time to keep an eye on all 6 companies moving forward as China looks to re-enter the tech landscape post-COVID. So what do you guys think? Is this split a good move? Was it forced upon them? Is there more going on behind the scenes? Is Jack Ma coming back just a coincidence? Or was this planned? Share your thoughts below. And from Modern Wall Street, I'm James Swinney.